Lots of closing.
That's awesome.
Yeah, it's very
Hi,
exciting.
everyone. We're going to give people some time to get set up in the system and then we'll get started. So, Stuart and I are joining you from Austin, Texas at the Omni Bartons Creek.
Sort of
It is,
Austin.
huh? So
Only sort
Austin.
of Austin,
Yeah, it
right?
is sort of Austin. We're in the burbs.
In the burbs, 100%, but beautiful.
It is absolutely gorgeous, but it is hot here. My word. It's like I came in to my room for this and I was like trying to get the frizz factor down because that humidity is making my hair pop.
Let me tell you, as a Denver guy getting off the airplane and walking into a wall of water is just
Yeah.
like, yeah, I'm not
Yep.
used to this.
Yep.
Yeah.
Yeah. Yeah. It's pretty dry in Denver. We have a lot of humidity in Ohio, but it's just much cooler at this time of year. I
Yeah.
think the high is like in the 50s and it's 93 here today.
Yeah. I feel much less cozy than I did pre-call when I was definitely wearing a hoodie
Yeah.
for my work from home day.
Definitely.
Um,
Right.
so,
Understood.
it's not
Uh,
as warm here in Philly as it is everywhere else.
yeah,
Yeah.
yeah. We have similar. You get our weather one day later.
A hundred
Well,
percent.
at least in southern Ohio, like
Yeah. The
Cleveland.
storms just come
Yeah,
through.
Cleveland and Boston are like, Boston's one is a day behind Cleveland and Um, Philly is a day behind Southern Ohio. All right, well,
Hmm.
we have lots of people as note takers, and no, just one that I see so far. Oh, there's another one. We're going to go ahead and get started. And I want to remind everyone, so this one is going to be a more interactive sip. So I want to make sure, get your chats ready. I have it loaded. I'm not the best person at looking at chat while we do the show, but I have it up and I'm going to try to keep track of the chat log. But welcome to the SIP, a space where conversation fuels conversation, collaboration drives innovation, and industry leaders come together to tackle challenges. Just like catching up over coffee or an adult beverage, the SIP is all about meaningful discussions that move us forward. At TMC, we're committed to fostering forward-thinking environment where members thrive, grow, and make lasting impacts. And today we are here to share insights and real world case studies and strategies that highlight the power of working together. So, a big thank you for taking the time out of your day to join us. And today's episode is brought to you and sponsored by Lodestar and InGenius, two companies that took a conversation we were all having at TMC in Boston, speaking of
Hmm.
Boston, and turned it into a research question and came back with actual data. So, we're going to dig in that today. So, super excited.
Yeah.
Before we introduce the guests, this is an interactive conversation, as I previously mentioned. If you have any questions at any point or comments, drop them in the chat. We'll be checking it throughout the show, and we want to hear from you. So, joining me is Elena Gardner from Lodestar. Elena, welcome to the SIP.
Thank you. It's very exciting to be here, considering I also have a show about drinking in Thirsty
You,
Thursday.
yeah, I'm glad that our drinking shows finally collided.
Exactly.
Before I introduce our other guests, you want to tell us a little bit about what Lodestar does for those in the audience who are not aware?
Absolutely. Lodestar is a closing cost solution that integrates seamlessly into many systems. I think at this point we have like 15 to 20 different integrations. And we support lenders in all of those different spaces to provide accurate closing costs that we rep and warrant, allowing you to not think about cures anymore.
Yeah,
Very exciting
yeah.
stuff,
Where were you when I was a lender?
right?
So, and also joining us is Stuart Jones, the VP of Enterprise Sales at InGenius. Stuart, same for you. Tell us a little bit about InGenius.
Thank you so much. Pleasure to be here. Longtime listener, first time participant. So super excited. InGenius is a data provider. We provide mortgage production data across the industry for multiple use cases, but primarily focused on recruiting, business development, and fair lending CRA compliance. But really, truly, anybody in the industry, whether you're a bank, a credit union, independent mortgage banker, even vendors, leverage our data set to understand really what the mortgage market looks like in terms of production.
That is amazing. And I love these two companies putting their data together. They're really looking at two sides of the same transaction, and that's what makes the report so interesting. So let's dive into it. Elena, this started at TMC in Boston.
Mhm.
Walk us through the conversation. What were lenders telling you that made you think we could actually go find this data?
Absolutely. Yeah. So I kept hearing this 75% number that everyone seems to rely upon as like this pull-through rate average, right? I think the NBA has some reports, but it's the whole industry, right?
Yep.
And when we're looking at the mid-market, what might be true for the whole industry isn't necessarily going to be true for them because at the end of the day, right, you want to be comp setted against lenders that look like you.
Yep.
So I realized I was like, wait, I was like, we have all of this loan estimate data, right? Because that's where we're initially pulled in the LOS
Yep.
is that quote. And I sat down, I think Stuart and I had lunch or maybe a coffee. It might have been a coffee because of timing, in that lovely restaurant in Boston. And I said, I was like, hey, could we compare our two data sets to actually get a meaningful pull-through rate just for mid-market lenders, excluding those top 50 folks that are doing volume that just isn't comparable for some of these mid-market lenders.
Yeah. And Stuart, when this came together as a joint project, combining InGenius origination volume data with Lodestar loan estimate data across 100 mid-market lenders, what were you hoping to learn, or maybe what did you think that you would learn that may have been looked a little different?
You know, I'm a geek when it comes down to it, and just understanding, are the numbers that people are putting out there really valid, right?
Yeah.
You know, we wanted to get that the front end information, understand what those applications looked like based off of Lodestar data, and then take that back end side and say, hey, really truly based upon the verified data, this is the pull through that you're getting out of here. And now it's it's a benchmark that you can really put out there and say, hey, how well am I actually doing against my peer group? Elena already said it, very well earlier. Like, I don't want to compare myself to a top 50 lender, right? They have a different set of tools and everything else that go into their production. What do I have, and how can I really truly benchmark myself against my peers? And being able to put those two data sets together was just, I mean,
Yeah.
it was a match made in heaven, peanut butter and jelly, man. I tell you.
Yep. Yeah. And, with the mortgage collaborative, that's really the core of our business, is small and mid-sized lenders, although we do have a lot of the larger lenders. So it is important to understand that data against each other.
Mhm.
And if Melanie or Amy, if you don't mind sharing some slides, we're going to go ahead and we're going to let the cat out of the bag. It isn't 75% pull through. And
Mm.
I guarantee you that all of the lenders that are on here that are operators and maybe not on the sales side, they already knew that wasn't the case. But the headline number for 2025 is that 54.61% pull through rate across mid-market lenders. And Elena, before we go deeper, for anyone not steeped in the metrics every day, why does pull through rate matter so much? And why has it been so hard to benchmark until now?
Yeah, I think there's kind of a few different reasons for that, right? One, most of the MBA reports are self-reported, right? So you're relying on lenders to go and give their pull-through rates to an organization. This is taking that out of the situation, right? So we're taking data that says, here are 100 anonymized lenders, right? And saying, here's how we're going to segment them out. And also, we're doing it a little further up the pipeline, right? We're not going from pre-app, right? We're just
That
getting a
credit. Yep.
pre-approval, credit report, all of that. We're going from actual loan estimate, right?
Yep.
So you have a purchase agreement. We're trying to see what that pull-through rate looks like, and really finding that data available,
Yep.
and then grabbing Stewart's closed loan data and
Yeah.
comparing that.
Yeah. So, and let's like double down on the methodology a second. So when I read it, the pull through rate is the pre-application stage, but not so far forward, is actually much lower than what we see here. Like the
Mhm.
numbers I hear is like if lenders can get to 25 to 30% from credit pull to funded loan, then they feel like they are pretty successful. But
Mhm.
Lodestar fees are being pulled in the later process, which would
Mhm.
make this data reflect a more qualified pool than
Correct.
a true top of funnel measurement. So, Elena, I think that we're right here, but where in the origination timeline specifically is that being pulled? Because people do have, some people they pull the fee data in pre-application and some wait until they have an application to pull the fee data. So where were you seeing the data being pulled in the process?
Yeah, so it does vary a little bit based on how lenders have their Lodestar environment configured. But with that in mind, we only pulled our system of record quotes. So that's your LOS. So we're saying this is an LOS file that is pulled in there, and saying that a lot of times this is for that loan estimate, right? This is a
Yep.
rep and warranted fee. And our lenders are actually incentivized to not use those files until are those quotes until they're closer for that loan estimate, right? Our
Yep.
cost is per file. And we have an all you can eat pricing on the point of sale side. So we push people to do that,
Yep.
allowing us to get a cleaner data set for this point,
Yep.
in terms of it being really for that loan estimate purpose rather than a
Yep.
pre-approval purpose.
Yeah, and I like that you are controlling the data because
Yes.
when you try to, that we have a benchmarking tool called TMC Insights. And
Mhm.
what people, even though you give them like a data dictionary of what things mean and what fields you should be pulling, there still is a different interpretation of that. So being able to control it gives us a very specific picture and a very specific distinction as to exactly where the timing of which that's being pulled.
Yep.
When you break it down by institution type, if we'll flip to the next slide, banks came in at 57.7%, independent mortgage banks 53.44%, and credit unions at 50.73. Stuart, what stands out to you with those segment differences? And I'm actually a little shocked by this data. I'll tell you why in a second.
Mhm.
I was actually surprised when it came up as well. I yeah, there are multiple different things that came to my mind, but a couple of things that were very kind of upfront. Who is going in there and pulling that, who's going in there and putting that data to use, right? They're
Mhm.
pulling their customers in. They're engaging their customers. They're leveraging kind of the marketing tools that they might have. And I think all of that kind of varies from institution to institution, right? Along with the fact that I think there's probably, um, and this is conjecture on my side, but I would tend to say most credit unions in general don't necessarily have the loan officers that are maybe as steeped in the knowledge of the mortgage production, right? That are going to be out there pulling that transaction all the way through. The other piece that I was kind of surprised by is, historically speaking, you're often going to find that the IMBs might be the most nimble to be able to go out there and be able to maneuver, whether it's a pricing structure or product, to be able to bring more production to the finish line. So I was actually, to be honest, when Elena and I were talking, I was like, man, the IBs have got to be blowing these guys out of the water. And it wasn't the case. So being able to, again, come in and validate this to understand, oh, wow, okay, well, if banks are at 57% and credit unions are at 50%, if I'm out there operating a credit union today, being able to bring in this, do my pull through and be at 52 or 54, I'm beating my
Yeah.
peer group, which is really, truly what I'm competing against, right?
Yeah. And
Mhm.
I think, too, it's important, like if you're looking at this and, there's a 7% difference between IMBs versus credit unions. And when you look in that, it's like if credit unions were able to increase their pull through 7%, then that's seven funded loans for every 100. And when you look at that production, like that's really important, especially in today's market where margins are very thin. So it's like, what are IMBs doing differently? What I was shocked about, this is where my shock came in. I have this perception because I come from the lender world that credit unions have an advantage because their members are tied in to them. So I actually thought that they would have the highest highest pull through rate of the three segments because of that credit membership status of their members, and feeling like they're able to pull through. But you made a great point about, it could be like on the loan officer side and just what the nurturing of those members are through the process. Alina, on the outlier removal, you excluded pull-through rates below 30% and above 100% for a lender that's wondering whether their own data is clean enough to benchmark against the report. What should they be looking at?
Yeah, so you're specifically going to want to pull your loan estimates based against your closed loan volume. And I will note, I think too, I want on the credit union side, I think I wouldn't be surprised if of the pull through is a little bit higher because I think it might be a little bit low here just because of the credit unions tend to not have as many point of sale systems. They tend not to have those ancillary technologies, so they may be pulling a quote in their origination system earlier, which
Yeah.
is still going to be true, right? Most likely for you as a credit union. So this is something you can benchmark against as long as you're using it for kind of that purpose of where are you applying fees, right? Where are you doing that work? And I think that's a big piece. We excluded below 30 and above 100, just kind of with the mindset of looking at it in the sense of a lot of the ones that were really high made sense to us when we looked at the lender.
Yep.
Because maybe we do have some banks that do a large portion of home building, right?
Yep.
And once you're in that process, most likely going to close, right? You do have some fallout, but they're pretty locked into their lender. They're not going to shop around. And below 30%, we just saw that we did not have maybe all of their business to maybe provide full data set here. Um,
Right.
so that was kind of our mindset behind it, and just kind of trying to keep this data as clean as possible.
Yeah, understood. And for the listeners, please drop us a line in the chat if you have questions or if you saw anything in the data that shocked you or that you found interesting. Please drop us a note in the chat. And Stuart, if a lender is listening right now and their pull-through rate is sitting below 54% benchmark, what's the first question they should be asking of themselves or someone that can help them change that pull-through percentage?
It's data is king, right? Or queen, however you want to put it out there, right?
We'll
When you
go with
look at
Queen Stuart.
data, whoever's the boss, right? You pick your own.
Yeah.
I know who my boss is. Let's put it that way. And needless to say, being able to evaluate your data, whether it is your total production, right? How much am I doing? What is my mix of business? Right? Am I refi heavy? Am I purchase heavy? Am I doing more FHA loans, which might take a little bit longer, but you probably working with a good opportunity, or maybe not, right?
Yep.
There's so many different aspects of being able to leverage a tool like InGenius that can give you the insights into those actual, production numbers while
Yep.
you're looking at them, and then being able to take that and convert it into the operational efficiencies that might be needed in order to do it. Maybe it's Elena was talking about a point of sale, for example, right? Maybe it's a lack of technology that is preventing you, or maybe it's a member or a customer experience that isn't quite as good, and you're getting picked off along the way because they might be shopping you, right? What are the different items in there that you have the levers to pull on that can help you be more efficient? But really, what it comes down to, in my opinion, is looking at your data, making sure that you're understanding where am I doing my business? What does my production look like in those areas? My loan officer is efficient, right? Like you need to actually even get down to that level and say, hey, you have an idea most of the time of who's doing what type of business, right?
Yeah.
But are they spending more time going out and looking at real estate agents? Or are they just sitting behind their desk waiting for people to come to them? How can I do more production and get myself
Yep.
up to that, 54% benchmark, right?
Yeah. And, oftentimes I think that, as an operator, and I may be biased, but as an operator, in the past was looking specifically at, production numbers and, units per, loan position, per closer, per underwriter. That's a lot of what our benchmark tool does on production numbers, on cycle times. But those will definitely point out like inefficiencies and areas that you
Mhm.
need to improve in, but it doesn't relate to production numbers. And we so much as lenders, we need to focus on, I mean, you talk about warm leads versus cold leads. This is a person that you have quoted a price on. You have to figure out how to increase that percentage. They're in your pocket. So, what
Mhm.
do you need to do and what practices do you need into place to convert them? Because a very small percentage change is a really big impact to the bottom line of mortgage lenders who are struggling. And, one of the things that we have heard about too is about the cost to originate. And that
Mhm.
has been like a focus for the last 3 years. And then the other focus is the compression in margin and profitability. And so this leads us into Elena. I know Lodestar is releasing an annual purchase closing cost report next week. So
Mhm.
give us a preview of what that is going to look like and why should lenders be paying attention right now?
Absolutely. And I can even do one better because we decided to drop it a week early for our purchase report. So I'm going to drop it in the chat for everybody. Um,
Awesome.
just because we knew this was coming out this week and we wanted to be able to give it to our TMC members. So we expect some more press on it next week. But this is something we started doing last year. So it breaks down every single state, the closing cost percentages split between taxes, government fees, all of that, combined with the other side, which is title fees and that percentage of the loan as well, along with a median price that we've used for for that state, right? Because it's going to be different state by state. So you can see in DC, it's significantly higher than it is in, for example, Oklahoma, right? And so we want to be able to provide this. We do it in both percentage as well as dollar amounts. So this is the first of three reports that we do annually. So this is the purchase report. In 2 more weeks, you'll see the refi report come out. And then we do a conclusion report as we've gotten questions back from these two reports. So if you're looking at it, you have questions, shoot us an email, shoot me a DM, and we will be happy to be able to potentially answer that for you. We are very excited every year about this report.
So you just did something you never should do to an ADD person, which is drop data in a chat. So for
I
someone who's
know.
passionate about data, I'm scrolling, scrolling, scrolling. Oh no, wait. We're back to the SIP. Um, we do have a question that came in through chat. And it was, how is this different from obtaining the fees directly from the escrow officer?
I'm assuming that relates to our solution.
Yeah, I
Um,
think so.
so we specifically are going to manage every single title agent for you. So we get their fees, we manage it in-house, and then we provide it and rep and warrant those fees for accuracy, which I don't think your escrow office is doing.
Yep.
And yeah, that's basically it. But we're automatically integrated in your LOS. So hit button, get quote.
Yep. Yeah, and I think like if the question were related to benchmark, I think what the difference is then you're relying on individual lenders to give you the correct data field on the CD screen on the 2015 itemization, which it's still called 2015 itemization for a reason, but
Mhm.
it's they don't align across organizations. So I think where Loads in doing the benchmarking piece, where Lodestar is excelling at this is they are just pulling the data that they know belongs in the specific area. So it makes a cleaner data set to be able to benchmark against than if you're going to the lender and asking the lender then to give you the fields that it is in. So I also see much cleaner data if they're referring to the benchmark side of things. So um, but yeah, it is compelling. I can't wait to dig into that report and also look to see how we can further partner. So we have a few minutes left. If anybody has any questions, please drop them in the chat and we'll get them answered.
Yeah, and I do want
Um,
to note we are planning on releasing this pull-through report on a quarterly basis. So it'll be a historical report. We're going to start with Q1 of 2026 compared to Q1 of 2025.
yep.
And we're looking to expand our data set as well. So we're going to expand it to include a larger number of lenders just to give a little bit more higher quality. So this is a TMC sneak peek. So
Yep.
if you guys have things that you want from this, please tell us
Yep.
because now we can make it happen, maybe.
Yep. Yeah, I definitely my brain's going 100 miles an hour, and this is something that Stuart and I have been talking about with along with Jeff and John Isquist at InGenius is being able to use the data from our preferred partners so that our lender members can participate in benchmark into TMC's benchmark tool without having to connect their data. So it's a passive way to get those data sets and benchmarking without them having to submit the data. Now they're going to miss out on a whole lot if they're not submitting their data, like the
Mhm.
production numbers and units, like, sorry, Stuart, but your numbers are only as good as the counties that record your data. So like the funded units and volume data is very important and, the cycle times data. But to your point, you mentioned earlier, Elena, was the conversion at different points. And we want to be able, for those who participate, we want to be able to show your conversion rates from credit to funding, from TRID application to funding, from underwriting to decision to funding, because those things are important because if you're losing in a certain area, then we got to figure that out and help you
Mhm.
make sure you're not losing those clients, especially further down the funnel of the life cycle of the loan. Stuart, any thoughts to add here for us as we start to close out?
I was just going to follow up on what you just said. Understanding where your fallout is happening is probably the most important thing you can do, right? So, is it, during underwriting or is it, the rest of the pieces? Like there's just so many different opportunities for the efficiencies and the effectiveness of leveraging your data, right, to improve your business. No, outside of that, being able to provide a report like this, it actually opened my eyes a little bit to help understand. So being able to provide it on a go forward basis for everybody and so that people can understand, oh, okay, is the market moving? Am I moving with the market? Right.
Yep.
Those are a couple of things that you're going to be able to figure out. So thank you very
Yeah,
much for
I
having
think
us on.
Yeah,
Yeah.
absolutely. I think the evolution of data, I'm a big data geek. And so back in 2013, I went to work for a company and I knew how many loans closed by counting the wall. And in the closer's room, in the room where the closers sat, there was a painted on white wall that every time a loan came in for closing, the closer would go up and they would write it on the wall. And then if it ended up not closing, they'd go in and they would erase it off. And the way that we knew how many loans were closing or week to date, month to date, is we literally counted. And we got really automated in that we would draw a line for the day and we'd put the total. So then we could like see from day to day what we were doing and like the running total and being able to see what we have today where we can actually just take that closing data and throw it into a BI tool and be able to get analytics on that and then to take conversion data and do forecasting. It's like it seems like it was an ice age away that I was counting a wall to know how many loans that I closed. And it's only been
It's age
13
away
years.
in our
It's
business,
insane.
right? Like the
Yeah.
speed of change that things are moving now and being able to leverage the AI piece to it, right? Like, wow, there's so many pieces that you can
Yep.
to put invest in the
Yep.
company themselves, right?
Yep.
To wow,
Yep.
okay. And AI piece is just one of those. I keep on hearing it over and over. I hate saying it, but it's amazing what it can do for you.
Yeah.
Yeah.
Well, guys, that's a wrap. So this has been a fantastic conversation. I think it's exactly the kind of work I want to see more of. Industry peers turning a conference conversation into a research project and bringing the data back to the community to provide lenders and to really provide impact in the industry. A huge thank you to Lodestar and Genius for sponsoring the episode and for doing the research. And thank you, Alina and Stuart, for walking us through it. We'll be back next week, Tuesday, May the 5th. Oh my goodness, Cinco de Mayo. Can you believe that next week is May? Oh.
It's
But
crazy.
but this is a reminder. So May, we're going to do something super risky. We're going to start going live on LinkedIn at 2 p.m. Eastern time. So today, this show will be cast on LinkedIn at 4 p.m. Eastern time. But next week, we're going to just go directly live at 2 p.m. Eastern for the entire industry. If you're not a member and you want to explore everything that TMC has to offer in our TMC Insights Benchmark Report, feel free to reach out to me directly. And until next time, cheers.
Cheers.
Thank you
We'll see
guys.
y'all.
Great show.
Thank you. Bye bye.